Hello everyone, and welcome to this presentation of Trading Candlesticks with the Pet D. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. And in today's presentation, we're going to talk about specifically candlestick trading. We feel that candlesticks are a great tool in which to trade virtually all of the markets, but they're probably the most misunderstood and often used incorrectly type of tool for your trading. We're going to show by simply adding one of our most popular tools, the Pet D, you can really ramp your odds for success with your candlestick trading. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results using candlesticks with the Pet D, but please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated in the future. So as you're taking a moment to view our disclaimer, I also want to invite each and every one of you, if you haven't decided to join us by now, I invite each of you to follow us on Twitter. There's our handle there, at SPCLSTTRADG. I post free information on a daily basis there, anywhere from actual signals that we're currently in to daily financial wisdom. So there's our handle. Feel free to copy that down and follow us on Twitter. Now, I'd like to start off by giving you a little bit of philosophy behind Specialist Trading. We are first and foremost an educational company. I know a lot of traders like to come to websites or educators, and they want them to tell them what to do. In other words, you go there specifically to find out what to trade that day, what you should buy, what you should sell. That goes entirely against the philosophy at Specialist Trading. We want to empower you with all the information that we give you in our educational courses so that you can decide for yourself where you want to buy, what you want to buy, what you want to sell, and how to actually trade. Now, it's been estimated that anywhere from 75 to 85% of all traders ultimately fail. And by failing, we don't mean that you go into a small period of losing streak or something like that. It's more like you give away all of your trading capital and you can't trade for some time until you acquire some more money to be able to trade with. So we don't want to ever put our students in that way or in that direction. We feel the main reason is because you're making your trading too complicated. And I say this from firsthand experience because when I used to trade on the floor of the Pacific Stock Exchange, my trading was extremely complicated. I was doing all the things I was supposed to do, but for some reason I wasn't making any money. And my mentor said, Steve, the reason why is because you're following and you have just too many indicators, you're following too much news, and you're following too much outside sources. So what they said to me has really stood the test of time, and it really stuck with me. And they simply stated, they said, Steve, it's the easiest thing in the world to overcomplicate your trading. It doesn't take a lot of work to do that. Anyone can do that. You can be trading 30 years or 30 minutes. Anyone can overcomplicate their trading. But it's the most difficult thing in the world to simplify it. So that's what we really teach and try to instill on all of our traders, to simplify your trading, because ultimately simplicity equals consistency, and that's what our goal is. We want to get you on that road to consistency. We're not about hitting home runs, although they may happen from time to time. We're not promising you the world with our strategies or techniques, but we're trying to get you on that road to consistency, because consistency will allow you to be trading 20, 30, 40 years down the road, and that's really, in our opinion, the meaning of success. So that's what we try to instill in all of our members by making you a part of the process, doing the hard work to be able to become consistent in your trading. Now, before we begin, after I explain exactly what we're going to be doing here, I just want to remind all of you that, remember, I love to take questions, but if you happen to have any questions, kindly wait till the end of the presentation. That'll be in about 20 minutes from now, 25 minutes, and then we'll reserve the last 10 or 15 minutes for questions. So if you have any questions, write them down and try to remember them, and I promise I'll get to them at the very end of today's class. All right, so let's start off by talking about candlestick patterns. We have nothing against candlestick patterns, first of all. It's not that we're saying they're a wrong way to trade. In fact, we have one of our most consistent strategies. Strategy number 5 is based off of candlesticks. But we feel that they're traded incorrectly by the majority of all traders. So let's look here at the basic candlestick patterns. As you see here, these are probably the most popular and often used patterns. We have anything from a doji all the way to a hanging man to a hammer and even an evening star here. But I would say the most popular and often used and probably simplest one to spot out of all the candlestick patterns is the engulfing pattern up here. Okay, you have the bullish and the bearish engulfing pattern. So let's just focus on those for the sake of making things simple. Now, for those of you who aren't familiar, or if you need a refresher course, a bullish engulfing pattern, or all of the engulfing patterns, are a two-bar pattern. In other words, they rely off of two bars. That's what constructs them. The first bar in a bullish engulfing pattern is down. It's a lower day. In other words, you open, or the opening would be here, and you close lower, as represented by this dark body as you see right here. All right? So that's the body from the opening to the close. Now the second bar in this two-bar pattern is the engulfing pattern bar. And that's where we engulf the down body of the previous bar. So you open at the same price or lower, and you close at the same price or higher. You completely engulf the body of the down day, the previous bar. Now, we're not engulfing the entire range from the top of the wick to the bottom of the wick. We're not concerned with that. We're only concerned with engulfing the open to close of the previous bar, or bar number one. Why is this called a bullish engulfing pattern? Because the odds are in your favor for you continuing to go higher for the next 3 to 5 bars. That's a nice edge, okay? Now, if we're looking at a bearish engulfing pattern, it's the same concept. We just reverse the rules. Once again, it's a two-bar pattern. Bar number one is an up day, meaning that you open and then close higher, as represented by this open body here. Bar number two is a down day, and the body from the open to the close totally engulfs the body of the previous day from open to close. Now, we're not concerned with engulfing the extreme high and the extreme low of the wicks. We're only concerned with engulfing the previous day's open and close range. Okay, it can be either equal to or greater than, but it's engulfing. And this is a great edge as well, because the odds tell us that we will continue in a lower direction for the next 3 to 5 bars. So this is a great way to trade. What a great edge to know that if you see this pattern, most likely we're going to continue for 3 to 5 bars, whether they be 5-minute bars or whether they be weekly bars or daily bars. Now here's the common definition of engulfing patterns. The engulfing candlestick pattern is a reversal pattern, okay, meaning that the trend is going to reverse. And this usually occurs at the top or bottom of a trend. So in other words, what people want to do, if you see price going lower and then you see a bullish engulfing pattern, well, that's most likely the way it's defined here, the end of the trend, and price is going to reverse and go back higher. Conversely, if you see price rising and rallying, and then at the very top you see a bearish engulfing pattern, most likely that's telling you a clue that price is going to reverse and go lower. This is the standard use of engulfing patterns, and for that matter, the standard use of most candlestick patterns. That most candlestick patterns are reversal patterns. So let's show you how most people use this, and this is why we feel how it's used incorrectly. As we look here in this example with CVX, we see prices going lower, so you can say we're in a downtrend. And at this point right here, what do we find? This two-bar pattern is a bullish engulfing pattern. So conventional wisdom and all the books and classes you've attended and seminars and webinars tell you that this is a buy signal. And then remember, an engulfing pattern is not a strategy, it's not a system. It's not a technique telling you where to enter, where to exit. It's simply a great clue telling you that this is a buy pattern, and most likely you should start to consider going long. Now, if we considered going long here, look what would have happened. It would have gone up for maybe a day or two, but we ultimately would have failed and lost money. But we believe in, once again, what we've read or the courses we've taken, and we see that the trend continues to go lower, and we're met once more with a bullish engulfing pattern. So this tells us, well, maybe we jumped the gun a little bit too early. Most likely this is the end of the trend, and this is where we're bottoming out. After all, most candlestick patterns are reversal patterns, so we're going to reverse this downtrend. So you jump in and buy, and look what happens. You go even lower. This is why we say the majority of traders trade candlestick patterns incorrectly. All right? The reason why is because they are out of sync with the trend. The way we're going to increase our odds for success is that we want to be in sync with the trend. Candlestick patterns will have a higher level of consistency if you trade them in sync with the trend. So that's the problem. Most people, as we said, we have no problem with trading with candlesticks. The problem is we don't use them as reversal patterns. We use them to be in sync with the trend. They have a higher level of consistency. That's why most people fail by using candlesticks. There are some people that do very well. They make very good money trading candlesticks, but they have an inner sense of the markets. Remember, we're an educational company. We're trying to teach you how to elevate your trading to consistency. All right? We can't do that unless we have things that are more cut and dry. So what we've seen through experience is that candlestick patterns are a very nice edge to have with your trading as long as you trade them in sync with the market. So go back and do a little homework. Look at your candlestick trades, and most especially the ones that were losses. Most of the time, it's probably because you were trying to buy when you were in a downtrend and trying to sell when you're in an uptrend. And we feel this is a recipe for disaster. You always want to be in sync with the trend. Here's the trouble. It's difficult to define how to be in sync with the trend. Everyone and every educator has a different idea of what being in sync with the trend means. This is where we introduce probably one of our most consistent trend identifiers. It's the PET-D. Now, the PET-D is simply a short-term trend identifier. It's a color bar algorithm. If you see a series of bars that are colored green, it's telling you that the short-term trend is up. And conversely, a series of red bars is telling you that the short-term trend is down. So what a great tool to know that you are in sync with the trend now. Where before you were trying to, you were hoping and praying that, well, this is a bullish engulfing pattern. I hope it stops here at the bottom of this trend. Now all we have to know is that we're in sync with the trend by using the color bar algorithm or the PET-D. So how do we apply this with our candlestick trading? Well, for bullish engulfing patterns, here's what we want to do. Remember, the bullish engulfing pattern is a two-bar pattern. We're only going to buy if the engulfing bar or both bars. So in other words, if bar number 2 or both bars are colored green. Now conversely, let's say we see a bearish engulfing pattern. Well, we're only going to sell, we're only going to take that sell signal if bar number 2, the engulfing bar, or both bars are colored red. Why? Because this will tell us that we are in sync with the trend. So in other words, either bar number 2 or both bars have to be the same color. Okay, in which case if we're buying, they must be green. If we're selling, they must be red. Now remember, we're only focusing on engulfing patterns today, but you can virtually use this with any candlestick pattern. Just to make things simple so we don't spread ourselves too thin here, we're just going to focus on bearish and bullish engulfing patterns today. All right, so let's look at some current examples. Let's start off with stocks for all you stock traders out there. Let's look at GoPro. Okay, as we look here, this is just a standard chart coming into September, just a couple of weeks, and you can see we've been going up. So it looks okay, but at this point right here, we are met with a bullish engulfing pattern. Now, conventional wisdom tells us, well, we should be looking for a bearish engulfing pattern. We've been going up, we're in an uptrend, we want to sell. But if we apply the PET-D, the PET-D will tell us what we should do. Remember, if we want to buy, the bar should be green. If we want to sell, the bar should be red. Well, we look here, and the bars are green. So this is telling you that you are in sync with the trend. This bullish engulfing pattern is in sync with the trend. So if you wanted to take this signal and apply some type of entry pattern to it, or some type of stop loss or something, just to make sure that you're in sync, it's okay as long as you're going long. And look what happened. Not a bad confirmation tool, huh? All right, now as we go higher, we see here that we've really had a really nice run up, roughly from 45 all the way up to 70, 25 points in a couple of weeks. Now you're starting to think, boy, maybe we've gone up a little bit too much. Maybe it's time to get out. But the bars are still colored green. But remember, we've taken all these courses, and we see here that here is a bearish engulfing pattern, all right? All the courses, all the educators, all the webinars I've gone to, they said that you're supposed to sell on a bearish engulfing pattern because that's telling you it's a reversal pattern and the trend has ended. But remember, we're not listening to conventional wisdom because we know there's no consistency in that. There's consistency if we trade with the trend. So we wouldn't take that. We wouldn't take that. We'd still be in our position. And then a couple of days later, not much happens in the market, and by now you're saying, boy, there's another bearish engulfing. I should get out. The market's telling me I got to get out. But remember, what is the trend saying? The PET-D is telling us that the trend is still up. So don't take these sell signals, okay? And look what happens. This is why most people lose, because they think that, well, a bearish engulfing pattern at the top of a trend is telling me it's going to end. Sometimes it works, but sometimes it doesn't. And the times it doesn't, you give everything back on the trades that it did work. So we're going to just be in sync with the trend. We're still just long from the very first trade all the way back to August back here. Now the market continues to go higher, and guess what? We have another bullish engulfing pattern. So the market is giving us another clue that we're most likely going higher, and we do go higher. So do you see how the entire time we were in this trade because the pet D was confirming the trend was up? Now you could raise your stop. In our courses we teach you ways in which to track your trade, raise your stops. You can squeeze as much gain or much profit as you'd like. Here's another example, NFX. Now obviously the trend is down in the short-term trend. We've been going lower, all right? So we are looking for some type of bullish engulfing pattern to go up to tell us that the trend has changed. But we find a bearish engulfing pattern. We said, well, this is kind of weird. We don't want to be going short at the bottom of a downtrend. So we apply the pet D to tell us which direction the trend is going. And guess what? The pet D is telling us that the trend is still down. So we can take this bearish engulfing pattern as a sell signal if we want, apply some type of entry strategy. And we really don't go down that much. We go kind of sideways to lower. But we're met with another bearish engulfing pattern, and all the bars continue to be red. So this has given us confidence that we're still in sync with the trend. So we remain short, or if we wanted to, we could short more, and then finally the momentum kicks in. How about CVX? This is the trade we originally showed you how most people usually trade bullish and bearish engulfing patterns. And one of the best things about the pet D is that it will not only get you into very profitable trades sometimes, but it will also keep you out of very negative trades. And sometimes that's even better. As you see here, CVX was headed lower, and we were met with a bullish engulfing pattern. Had we simply applied the pet D before we went long, we would have seen that all the bars remained red. So there's no way we can take this as a buy setup. There's no way. The bars had to be green in order for us to take that. So we didn't take that, and it's a good thing we didn't. So it kept us out of that losing position. But now we're met with another bullish engulfing pattern. This is where people would say, well, that first one didn't work. It was a little too early. Let's get into this one. But as you can see, they're both red, and look what happened. How about ABX? Obviously, the trend is lower, okay? If we apply or if we look for the bullish and bearish engulfing patterns, we are inundated with bullish engulfing patterns the entire way down. But remember, as I stated, sometimes the best trades are the ones we never take, because if we simply apply the pet D, we see that the entire way down we were in the red mode. So there was no way we would have taken any of these bullish engulfing pattern trades. Now remember, we're just showing you one technique here with the bullish engulfing patterns. This can be anything. It can be looking at dojis, Harami's morning stars, evening star. It doesn't matter which pattern is yours of preference. All that matters is that you are in sync with the trend with whatever candlestick pattern you want. We're just focusing on bullish and bearish engulfing patterns here. How about KLIC? As we see here, the beginning of this rally was all in green, telling us that the stock was going higher. But at this point right here, we changed to red, and then it went much lower. How could we have taken advantage of this using candlestick patterns? Well, we see the entire way up, we had bullish engulfing patterns telling us it's okay to be long. At this point, we could have exited, or at least if we tracked our trade all the way up, we could have locked in a nice gain. And then we're out of the market until we see a bearish engulfing pattern, and we could have taken advantage of this large swing to the downside. Okay? All because all these signals were confirmed by the pet D. If we want to go to a higher time frame, the way I know a lot of people like to trade, well, here's a weekly chart of Microsoft. Okay? Now, as you can see, obviously, going into October here on these weekly charts, Microsoft had been going higher and higher. All right? Was there any way we could have taken advantage of this with candlestick patterns, bearish and bullish engulfing patterns? Well, we see here that there was a bearish engulfing pattern. We may have taken it because we had a really nice, 3 or 4 point rise, and most traders would have gone short right here thinking we were going to reverse trend. But because the bars were green, we never took this sell signal. But as we went higher, we had a bullish engulfing buy set up here, and then another one right here. So the entire time we were being told by the Trend Identifier to stay long Microsoft on a weekly basis. How about heating oil? We all know that heating oil, crude oil, have been going much, much lower coming into October here. Is there any way we could have taken advantage with bullish engulfing patterns and bearish engulfing patterns if we were in sync with the trend? Well, obviously in hindsight, it's easy to know that the trend has been down, but as far back, going back to September, even August, these bars were red. So it was easy to know that we were not going to be buying anything. So therefore, if we saw a bullish engulfing pattern, we would not take it. We would only be taking bearish engulfing patterns. So here were two bullish engulfing patterns, and it's good that we had the pet D because they kept us out of these losing positions. Finally, there was a nice bearish engulfing pattern right here. You could have taken advantage of that. Now, remember, we're just looking at bullish and bearish engulfing patterns. There are a lot of other candlestick patterns I can see right here in front of us that we could have applied as well. How about the E-mini? Okay, let's look at the E-mini S&P now. We looked at stocks on a daily basis. Let's look at a 10-minute chart of the E-mini going back to the 21st, which was last week. Now, right off the bat on this 10-minute time frame, we see that we opened and went extremely higher. We went up about a good 10 points in the E-mini in the first hour or so. So at this point, you're probably saying to yourself, well, boy, I should be looking for a bearish engulfing pattern. After all, that's the way I've been taught. We want to look for reversal patterns. But if we look here, we find two bullish engulfing patterns. The market is telling us it wants to go higher. But how can that be? We've already risen a lot. Well, let's just add the pet D. And the pet D is telling us, yeah, they are confirmed. The trend is saying it's going higher. Until we get red bars, it's okay to take these setups. So you could have squeezed another 5 points out of the E-mini had you taken any one of these two signals. Now, as the E-mini started to sell off here around 9:30 Pacific time, we went into a small sell-off. But guess what? All of the bars remained green. None of them turned red. And at the very bottom of this sell-off, we found another bullish engulfing pattern. So here's our chance to get back in, and we went even higher. Now, at this point, roughly about noon on the 21st, we finally met with a bearish engulfing pattern. This is the one we should take to go short, right? No, both bars are green. The market is still telling us most likely going higher. Do not take this bearish engulfing pattern setup. And it's a good thing we didn't. We even got one more setup to go short right here. Had you taken that, you would have missed out on another 5 points to the upside on the mini. So do you see we have a lot of setups here using these engulfing patterns, but the pet D tells us which ones to take and which ones not to take. How about a 2,000 tick bar chart? I believe this was this week. Earlier we had a nice bounce up, a nice rally, and as we go higher, we have three setups. We have a bullish engulfing pattern, we have a bearish engulfing pattern, and we have another bullish engulfing pattern. Which ones should we have taken? Well, there's no real way to find out because we don't know if we're in sync with the trend. We have to find out what the trend is. All we do is apply the pet D, and now we can see. Remember, the pet D says that both bars or bar number 2 has to be telling you where the trend is. So we have a bullish engulfing pattern here, and bar number 2 is green. So this is telling us it's okay to go long. So you could have gone long roughly around 1949, roughly. Now we have a bearish engulfing pattern. Both bars are green, so you would not have taken that signal. Followed by another bullish engulfing pattern, and both bars are green. So this one you could have taken, and we see what happened. Now, just to show you that we're not cherry picking and picking the best examples, sometimes when the trend finally does decide to change, that's where you always have a little bit of difficulty. You may get whipsawed a bit. Let me show you how that works. So you had a really nice trade here, roughly from 1949, 1950, all the way up to roughly 1955, a nice 5-point gain on a tick chart. Now, at this point, we are met with a we had nice bullish engulfing patterns telling us to stay long the entire time. But at this point, we were met with a bearish engulfing pattern. But the bars were green, so we would not have gone short or sold our position. We're still in the position, all right? Now, look what happened. We went lower, but we still had another buy setup, a bullish engulfing pattern. Both bars are green. So we either could have purchased more, or we could have just said, well, this is a sign telling us to remain long in the position. We've still got a nice 3 or 4 point gain. But at this point, on the very next bar, we turned red. Now, this is not telling us that all bets are off, sell everything. It's a more aggressive way of trading. But had we looked at this through candlesticks, we would have seen that. Remember, bullish and bearish engulfing patterns are 2-bar patterns. So if we looked at this, this is a bearish engulfing pattern, and bar number 2 is confirming that most likely will go lower. So if you're a more advanced or aggressive trader, you could have exited your position and gone short. If you just wanted to be conservative, you could have just placed your stop higher and locked in some of the gains you had from being long. But if you were more aggressive, you could have taken this as a short signal, and you would have had a really nice gain and made back everything that you lost on that little whipsaw. Now, if we look at the Forex markets, we see the same concept applies regardless of what market we're looking at and what direction. Here's a chart of the dollar-yen. Obviously, the dollar-yen has been going higher, okay? Is there any way we could have used candlesticks to keep us in this uptrend? Well, we apply the PET D, all right? All the bars have been green going all the way back to August, and we find all these bullish engulfing patterns. These were all signals. These were all clues that the dollar-yen was telling us to be long. In fact, it was basically screaming out, please buy, stay long, buy, buy, buy. So all you had to do was, if you were lucky enough to be long in this initial position here, or if you got long anywhere here, you could have remained long, and look what happened, okay? Remember, all we want to do is look for a candlestick pattern. Even though we're focusing on bullish and bearish engulfing patterns, it can be any candlestick pattern, and just make sure that we're in sync with the trend. Here's a daily chart of the euro dollar. Euro dollar had been going lower coming into August, and we look here, excuse me, the majority of the bars were red, telling us that we are in a downtrend. This would also tell us that we are in no way going to be looking for bullish engulfing patterns. We're just not going to take them. Why? Because we're out of sync with the trend if we did that. So if we look for them, we see that we had a very nice bearish engulfing right here. Bar number 2 was red. We had another bearish engulfing right here. So right at the top, it was telling us to get short. But as we got to the bottom, we were met with 2 bullish engulfing patterns. So at this point, once again, this is the way most people are taught. Conventional wisdom says candlesticks are best used as reversal patterns. So the trend has been edging lower, so we're most likely probably going to reverse and go higher. So most people would have taken these signals as buy signals. But because we've applied the PET D, we will not take them, and it's a good thing we didn't. You see how simple this is when you are in sync with the trend. And once the trend continued to go lower, all you had to do was look for more setups. Here's another bearish engulfing pattern. You would have taken that if you wanted to. Here's a bullish engulfing pattern, but both bars are red, so we wouldn't have taken it. Here's a bearish engulfing pattern, and another one giving you more chances to get in short. So you see how simple this is. Once again, we have the edge of these candlestick patterns accompanied with the edge of the PET D. All right, so let's recap. We only buy or sell candlestick patterns. It virtually does not matter which ones we're looking at. It can be, a morning star, it can be a doji, it doesn't matter. But we will only buy or sell candlestick patterns that are in sync with the trend. We've just showed you tons of examples in stocks. We showed you examples in the E-mini and tick charts and 5-10 minute charts. We've also shown you examples in the Forex markets, okay? But please remember, candlestick patterns by themselves are not strategies. They are not systems. They are simply edges. They're simply guideposts or signposts telling you that most likely this is going to happen. It's the market giving you a clue as to what it wants to do. But they are not strategies telling you where to buy. They're not telling you where to place your stop. They're not telling you where to exit. And they're not telling you where to move your stop up if you have a gain or to protect yourself. So those are the pieces of the puzzle that you do need in order to trade with the PET D. So here's the bonus. The beauty of the PET D is that it can also be applied and used to confirm strategy signals. So it's not just something that you use for candlesticks. You can have a strategy, any strategy, and whatever your setup, the day you get a buy signal, that bar should be colored green. The day you get a sell signal, that bar should be colored red. Okay? That's the beauty of this, because it's confirming that you are in sync with the trend. Now, we just showed you that through candlesticks, but it can be virtually with any strategy. Now, I know a lot of you will say, well, Steve, I don't have a strategy. That's why I'm here. I'm not very consistent, or I'm not experienced with trading. Well, let me talk about one of our most consistent and popular strategies, strategy number 4. This comes with all the entry rules, all the exit rules, all the stop placement, number of money management, number of shares or contracts to trade, as well as exit plans. It's a great strategy. I trade it myself. I learned it when I was trading on the floor of the Pacific Stock Exchange. Adding the PET D only heightens your odds for success. So let me give you some examples. It's a pattern recognition strategy, but sometimes it's similar to candlesticks, but it doesn't rely on candlesticks at all. It's not that type of a pattern strategy. It looks back about 5 to 7 or 8 bars to come up with a specific pattern. Okay? So let me show you some recent signals using strategy number 4 with PET D applied. Here's ROST. As we see here, we're kind of in a rangy pattern coming into the first or second week of October, going up and then coming lower. Now, as we see here, a buy signal was generated on the 16th. Now, just like any strategy, sometimes you're like thinking to yourself, well, boy, is this going to be a good signal? Should I take this or not? How do I know whether this is going to be a profitable signal? Well, one of the best ways is to apply the PET D. And since we're going long, we want to see that setup bar colored green, as it is right here. So this was giving us the confirmation to go long, roughly about 76, 77 area, and look what happened, okay? 3 to 4 points in the next week or two. Now you can also use this as a directional tool for the market that you're watching. Here are signals in the QQQ, 3 signals generated from the middle or end of September all the way up until last week. Now we see here that the first signal was a buy signal, all right? Remember, this is not, even though we're looking at candlesticks, we're not concerned with candlestick patterns here. So we're not engulfing anything or having any type of a morning star or bottoming pattern. It relies off a completely different pattern we're looking for. Now, this was a faulty signal because had you gone long, you would have most likely been stopped out, or at least eventually been stopped out, because we didn't go higher. Now, on this signal that was generated on the 9th of October, just a couple of weeks ago, this was a great signal to go short, and you would have had a really nice downward move in the QQQs. Now the next signal, which was produced just last week, was another sell signal, and this was a losing signal. As you can see, the market went higher. So we had 3 signals in the past month, 2 were losers, and 1 was a nice win. How could we have increased our odds for success here? Because once again, we're not trying to cherry pick and tell you that every signal that we have of every strategy is a winner. We do have minor losses from time to time. But is there a way to sidestep a good part of those losing trades? Yes, there is, by adding the PET D. Remember, if we have a buy signal, that buy setup bar, the day we get the signal, should be green. If we have a sell signal, that setup bar should be red. That gives us the confirmation to take the trade. So if we apply the PET D, we see here that the buy signal on the 26th should have been colored green. It was colored red, so you could have bypassed that entirely and missed that losing trade. Now the sell signal on the 9th should have been colored red, and it was, and look how well it worked. Now we had our last signal last week to go short the QQQs on the 22nd. It should have been colored red, just as this one was colored red, but it wasn't. It was colored green. So it did not work, and we totally bypassed another losing trade. So out of 3 trades that we originally would have taken, we now only took 1, and it was a winner. So do you see how the PET D will ramp your odds for success? Remember, this works on not only strategy 4, but any strategy you're trading with. How about a 10-minute chart of the E-mini? This is on the 28th. This was just 2 days ago. All right, coming into the day here on a 10-minute time frame, not really much is happening. We're kind of just in a range going upper and lower, but the strategy number 4, generated a buy signal. Let's say you had been a little gun shy, or perhaps you weren't sure you wanted to take that signal, so maybe you just bypassed it altogether. If you had the PET D, you could have confirmed whether you should go long, because it would have colored the bar either red or green. We want it to be colored green. So we apply the PET D, and guess what? It's colored green. So there's our setup to go long, and look what happened in the remaining 2 or 3 hours of the day. If we look at the Australian dollar, okay, daily bars going back to August, coming into September, we had 2 sell signals, all right? The first one didn't work at all. It went down a little bit, but had you gone in for the long haul, you would have been stopped out most likely. And then there was another one generated a little over a month ago. How would we have known which one to take? We simply add the PET D. Remember, sell signals need to be colored red. And we see here that this first signal was colored green, so we didn't take the trade. Remember, sell signals need to be confirmed red. But the second signal was confirmed red, so this one we would have taken. And you would have been very happy to have taken the second one, because look at the nice move you had to the downside. So even though we can't guarantee that this happens all the time, you'll see this over and over again with the PET D, how well it works with any strategy you have. Mostly with strategy 4, we see that, we call that our dynamic duo, because it confirms the trade that you're in, and it heightens your odds and your probability for success even more. That's already built into the strategy. So let's recap. We showed you what, in our opinion, is the correct way to trade candlesticks with the trend. All right. The reason why most traders fail with trading candlesticks is because they're out of sync with the trend. For some reason, we've been taught, myself included when I first started trading candlesticks, is that they're reversal patterns, and you can only buy at the bottom of a trend and you can only sell at the top. But that, as we see now, is faulty. That will work maybe half the time, but the other half it doesn't work. You give everything back. So there's no real risk-reward ratio in trading that way. We want to put the odds in our favor. So the best thing is to trade candlesticks in sync with the trend. Now the only trouble is, how do we find out what the trend is? Because everyone has a different idea of what trend is. So what we do is we add the pet D. All right, the pet D is what tells us if we're in sync with the trend. Same thing will work with strategy number 4. All right, we have a great strategy that has a very high level of consistency. It's probably one of our most popular strategies. It's traded in over 70 countries around the world by hedge fund managers as well as people who have been just trading for a few months. It's a great strategy. I trade it myself on a daily basis. But when you add the pet D, you not only have a great strategy, but you now just increased its odds for success. The pet D and anything else you're trading with is what we call our dynamic duo, okay? And when you add that with any strategy, mostly the strategy number 4, you have our specialist trading dynamic duo. So if I could just take the last few moments of today's presentation to talk about the great offer we have with Primo strategy number 4 as well as the pet D tool. Okay, this is a great 2-for-1 attendee special. You get instant course access. It's an online course, and you have 5 instructional videos. We teach you all the entries, all the exits and stops. If you notice, we didn't talk about that today with candlesticks because remember, candlesticks are not a strategy. They're simply a directional tool. They're simply a great edge that these patterns are giving you. But we now formulate that with entries, with exits, and with stops. We also provide you with signal alerts, weekly video trading lessons. This includes both add-ons, by the way. So in other words, you will get up and down arrows when a strategy number 4 signal is generated, and you will get the add-on that automatically colors your bars either green or red with the pet D. And then lastly, you have access to my personal emails. You can ask me questions whenever you'd like. This is a great 2-for-1 attendee special. The reason why is because what we sell these individually on our website would be close to over $2,000 roughly. But we've discounted this for our attendees today for a short period of time, roughly from the $19.95 regular price down to $14.95. And what's great about this as well is that we're offering payment plans. So if you can't come up with $14.95 in one lump sum, our trading consultants can put something together for you so that you can start trading right away with a payment plan. So this is for a limited time only. If you're serious about taking your trading to the next level and applying the pet D, you saw all the individual examples I shared with you today, stocks, E-mini, and Forex. You see it works in all the markets, trading with candlesticks. It's a great 2-for-1 special. Please don't hesitate to sign up for this great deal and contact us at our sister site. That's protraderstrategies.com. You simply contact any one of our trading consultants at trading@protraderstrategies.com, or you can call us directly at area code 310-598-6677. Okay, remember this deal is only going on for a couple of days, so please take advantage of that. And I want to thank you for waiting. If you happen to have any questions, let me go to the question and answer portion, and I'll answer all your questions that you may have had. I'll open up the question box. Roxanne asks, is the solid green bar, solid red down bar, or hollow green candle on solid red bearish candles? Boy, Roxanne, I'm sorry, I'm looking at your question here. Is the solid green bar, yes, in other words, a solid green bar is the same, it has that kind of a darker hint, tint to it. That is the same as a down day. That's a dark body, okay? But it's been shaded a dark green. That's the beauty of this. You can use standard candlesticks and you'll have the tint of green or red to tell you whether you still have an up day or a down day. So if that's what you're asking, yes. And it works. By the way, this works, these platforms work on TradeStation, Metastock, MT4, and NinjaTrader. And they can also be applied as well with Thinkorswim if you happen to have Thinkorswim too, but there's a special way to set it up, and I would suggest calling up the people at Pro Trader Strategies, and the trading consultants can help you put that together. BM is asking, hi, what time did you start, as could only get in 25 minutes after the schedule? Oh, I'm sorry. I think there may have been some problems with people logging in, I guess. We started at 1:15, but you know what? These are being recorded, so you can request a recording of this, and you can watch it at your own leisure. Let's see. I'm used to traditional red and green candlesticks. How does the PET-D lock on to these? Well, you know, Roxanne, it works fine. You would have to work with the people that set up the tech support, but so far we've had no complaints. You know, have been using it the standard way, which is white for an up day and black for a down day, and as you can see, it works perfectly. So that's the standard traditional way of looking at candlesticks from the Japanese point of view. I think it's only been Americanized to look at green and red. But once you let go of that and you add the PET-D, it really, you can see how you've increased your odds for success by applying it. So I would suggest talking to the tech support people, and they can set something up for you so it can be appropriate. But it shouldn't be that much of a problem. It really shouldn't be. Tony asks, is the PET-D a proprietary indicator? Yes, it is, Tony. It's we feel it's that valuable. We know what we've had since the PET-D has become more and more popular. We've had a lot of customers who swear by it, but we've also had a lot of customers who don't understand it. They think it's a system, which it isn't. It's really a confirming tool as well as a trend identifier. But because they think it's a trading system, they try to back test it and they try to reverse engineer it. And everyone's coming up with their own individual idea of what it's based off of moving averages, based off of volume. All I can tell you, it's based off of momentum, but it has nothing to do with those things. It's not based off of an open, high, low, close. It's a proprietary tool that I was taught on the floor. And the reason why we are not sharing with it, because it's that powerful, and we may go into licensing this. So we don't want to just give it away for free so that it's all over. We have hedge fund managers using this that swear by it, so we may be licensing it out to everyone going into next year. But it's a great tool. That's why we suggest purchasing it right now for this low price, because if we do decide to license it, it's going to be more expensive, and you're going to have to pay probably every quarter. With this, it's a one-time fee, and it's yours for life. Also, one of the things that probably one of the most questions people ask, I'll just answer this right away in case anyone's asking this down the road today. People ask, will there be different versions of this? Will we also do the color bars change? Do they self-change later on? No, they're not optimized in any way. So in other words, once a bar closes and it closes at a certain color, it will stay that color for the remainder of time. Sure, while the bar is dynamic, meaning let's say you're looking at a 5-minute bar and it hasn't closed yet, the 5-minute time frame isn't up, sure, it may change back and forth from red to green. It won't do it a lot, but it'll do it right when the algorithm is deciding whether it's going to change or not. But most likely it stays in one color, and then but once the bar closes, that's it. It doesn't recalculate later on 10 bars down the road and change. So it doesn't re-optimize. Also, I've been trading this for close to 30 years. I haven't added any new way to trade it myself. So I've been using this. I don't see us, upgrading this in the near future. So I really don't see it happening. So it's pretty much going to stay the way it is. Okay. Yes, some people are saying they join late. Can they get a recording? Yes, as you see the phone number there or the email address there with our trading consultants, simply contact them and they can furnish you with a recording. Okay. Does the PET-D work well with point and figure charts? Oh, that's a good question, Robert. You know what? I personally don't use point and figure, but I see no reason why it wouldn't, because remember, all we're looking for is to identify what the short-term trend is. And I know point and figure charts do produce trends at times. So if they can, if you have a trend in there, many times it will tell you the direction of the trend before it's seen on the point and figure. So yeah, I would assume it would. I just personally don't use point and figure. What is the PET-D? Okay, some people came in late, so let me just explain once again. The PET-D stands for the Primo Early Trend Detector. And what it is, it's a short-term trend identifier. All right, whereas we have other tools at Specialist Trading which tell you the overall trend, the PET-D is designed to tell you the short-term trend. And the beauty of this is it will oftentimes get you in sync with the trend well before you even know that it's established. as you saw in some of the examples I just shared with you. That's how sophisticated it is, but it's really simple to use. So what we've done is turn it into a color bar algorithm. And there's just two colors. If the bars are green, if you have a consistency of green bars, consecutive green bars tell you that the short-term trend is up. Once the bars change where you have consecutive red bars, well, now the short-term trend is down. So it's a great tool. We have in the courses, we have 4 different ways in which to apply entries with the PET-D. We also teach you how to use it as a stop placement. And I think its best advantages are 2. It tells you the short-term trend many times in advance, and also it confirms signals. As we just showed you with strategy number 4 and with candlesticks, it confirms whether you should be taking those edges or not. So many traders love to trade candlesticks, especially Forex traders. They swear by them. But the majority of candlestick traders I know ultimately fail because they are out of sync with the trend. Well, we have the problem solver for that. We apply the PET-D, and it tells you if you're in sync with the trend. So let's say you get a morning star, candlestick pattern telling you to sell, I believe, and it's in the wrong trend. Well, then you don't have to worry about it. You don't have to take the signal. Same thing, let's say if you get you have a doji signal at the very bottom of a trend and you think that's the bottom where we're going to be changing the trend and reversing. Well, if that doji is red, you know that most likely we're going lower. So it's a great way to be in sync with the trend regardless of what method or technique you use. Let's see, Nolan says the green candle right before the red of the 26 QQQ showed buy, that would have stopped out. I'll have to go back and look at that chart, Nolan, but remember, we haven't talked anything about stopping. Remember, we're only looking at patterns. We haven't even explained how you would use the PET-D as a stop. And just because you see one bar does not tell you that the trend has changed. It's a more aggressive way of trading. Sure, you can do that, and we teach you that in the course. But we haven't even gone into how to use it as a stop placement, so I'll have to review that for you. Jim says, does it work on TradeStation? Yes, it does. I use it on TradeStation daily basis. It works great on TradeStation. Remember, the platforms it works on are TradeStation, NinjaTrader, also works on MT4 and Metastock. If you have Think or Swim, there are ways to get around it through NinjaTrader and Ameritrade so that you can start using it on their chart. But I would suggest calling up the trading consultants and they can set you up with that. Rhonda asks, once again, what is it measuring? We really can't tell you. It's based off of momentum. That's what it's. We really can't. If we told you what it's measuring, we'd most likely give it away. We have tons of people that are trying to reverse engineer it and then sell it really cheaply on the internet, and so we just don't want to do that. Does it matter? Roger asked, does it matter which currency is listed first? In other words, the dollar, euro, or the euro? If I understand your question, are you asking in terms of which currency pair to trade? I'm not really sure I understand the question. All I can tell you is that regardless of which currency pair you're using, when we on TradeStation, the euro dollar is the EUR USD, but that may be a different format on other platforms. But it really doesn't matter whatever order you decide to put it up. If you get a chart, you can apply the PET-D to it. Okay, it all depends on what data basis you're using. Carl asks, if you don't have the PET-D, can you use your 50-period simple moving average to be in sync with the market trend? That's a good question, Carl. But remember, the 50-period is an overall market identifier. This is called our buy-sell line, and this is what we give away in all of our courses. I'll just explain what this is right now. It's the overall trend identifier. So what this is telling you is basically it's telling you whether you should be buying or selling, but it's an overall trend. It's for the pretty much longer term. The PET-D is for the short-term trend. It really fine-tunes those entries and fine-tunes a lot of the signals you're getting. So it really ramps it up and takes it one step higher, okay? Let's see, is this being recorded? Wayne is asking. Yes, it is. You had trouble getting to the webinar. That's okay. All of this is being recorded, Wayne. Let me see, get some more questions here. D asks, I just got in the webinar. Will there be a replay? Yes, you can request a recording. What about FXCM? Willie is asking if this applies to that as well. I'm not sure if it does, Willie. I don't think we apply it to that platform per se, so I'm sorry about that. You may want to call up the people at Pro Trader Strategies. Maybe they can put something together for you, or maybe there is something there. But at this point, I don't think it's applicable to FXCM, okay? Jim is asking, is it a multi-platform license? And as you say there, Jim, yes, for now we're giving access on multiple platforms. So that's the beauty of this. So if you have different platforms, you'll be able to use it on all of them, okay? We're allowing that for now. A lot of people are asking about the recordings. We apologize for that. Does it take into account Elliott Wave? As you can see here, everyone is trying to figure out what it's based on. And I can just tell you, so far, all the questions is not based on any of those. Personally, I tried to trade Elliott Wave, and I could never figure it out. It was just too subjective. So that would probably be the least thing it's based off of. I would just say, as someone who's been trading for 37 years and has been using this, I started out on the floor using this, but I can only apply it on a daily bar basis because we didn't have the programming and the color bar algorithm then with high-speed computers, so we couldn't apply it. But for now, I would just say, listen, you have our word, our faith. If this does work, you've seen the examples I just shared with you. You can see the testimonials on our website. It works tremendous. People swear by this. It helps their trading. It really makes no use trying to figure out what it is. Just apply it to your trading. You'll see how much you can increase your odds for success. John is asking, can you define the short term? Well, yes, the short term is subjective depending on what time frame. In other words, short term is just, even if we're looking at weekly bars, if we're looking at a year of weekly bars, well, the short term on weekly bars would roughly be maybe the last 3 or 4 weeks. Okay, if we're looking at daily bars, well, it would be maybe the last 5 or 10 days. That would be the short term. Conversely, if we're looking at 10-minute bars for the entire day, well, maybe the first hour or two. Okay, it's all relative. But we're short term is really for traders looking to be in the moment, more likely in the moment, as opposed to saying, well, I'm more of a subjective trader. I'm just looking at the overall picture. I don't need to know the swings and lows, the small little valleys. I want to just be concerned with the overall long-term trend. Well, that's fine. But if you're more concerned with these nice little golden nuggets in the peaks and valleys, that's the short term, okay? Rhonda asks, is there a money back period? Rhonda, I'm sorry about that, but we offer a 30-day exchange where you can virtually exchange for any other strategy or technique we have if you aren't happy. We've found that the reason why most people may not want to stick with a particular program or issue we have is because they don't want to put the work into making it fit their trading style. As I stated in the very beginning of the presentation, we are an educational company. We're not about just force feeding you signals the way a lot of other websites do and say buy this or sell this today with you just have to take it on blind faith. We feel that's a recipe for disaster for your trading. It's up to you to put the hard work in and have some type of mentorship with me so that you can understand this process and become a part of the process. Once you do that, we really feel confident that you'll be satisfied with all of our products, okay? But let's just say you're not willing or you don't have the time to do it. There's no money back guarantee, but you can exchange it in 30-day exchange for any other technique we may have. Let's see here. It looks like, let's see, Al says it looks like a T3 line to me. A T3 line, I believe that's Steve Bigelow's. I'm not sure. I don't think so. I'm not really sure what the T3 line is, so I couldn't tell you that. Is the PET-D analyzing the trend for the specific underline, or is it measuring the trend of the overall market? I see as more and more people are trying. The PET-D is analyzing the short-term trend. That's about the most we can give you, okay? But trust me, it's once again, we're trying to overanalyze this. As you saw in the examples and through our good faith of all the information we've given you, trying to, in all of our other presentations, we're trying to get your trading consistent. If you don't feel confident or you feel that it's not your cup of tea, we totally understand. And we feel that you'll be missing out, but we're not going to try and force anyone. But if you're really serious about taking your trading to the next level, I really feel you can't afford to miss out on this discounted deal, especially when we offer payment plans. We have a number of people that just swear by using the PET D along with strategy number 4. So you're getting 2 for cheaper than the price of 1. This is a great deal we're offering. If you're really serious, I highly suggest you contact the people at Pro Trader Strategies. You can email them right there at the email address or call them at the phone number and talk it over with them and set up some type of payment plan that best meets your needs so you can be up and running and start using it in as little as the next hour. So it's, as you see, it's something I've been using for this long period of time, and I don't promote or try and educate anything that I haven't used myself. So these are all great techniques I use myself on a personal daily, and I use these for intraday time frames as well as daily or weekly bars. You saw how they work in any time frame. What is the short term trend on the 5-minute chart? How many bars? Well, it all depends when we have the PET D. Okay, so the short. Look at it this way: if you're looking at a 5-minute time frame for the entire day, those small little peaks and valleys, little retracements within the day, those are the short term. Okay, and then once the trend starts again, well, that's the longer overall term trend. So we're looking for those short-term movements, and then once the larger trend resumes, well, then we get back in sync with that. But the PET D gets you in sync with all of those. So it's a great tool for getting in sync, and it gets you in sync so many times before the larger overall trend confirms it. We have a number of other webinars we've done in the past with the PET D for stocks where I believe there was a situation, gosh, I can't remember the stock, but the stock gapped open about 60 points. And the stock had virtually been going sideways and virtually no trend for the month or two prior to that. But 3 to 4 weeks prior to that gap open with the news announcement, I believe this was on Open, I believe. But yes, Open Table was bought out by LinkedIn, I believe. And the PET D signaled green bars for the first 2 or 3 weeks before the buyout announcement. So how did the PET D know that a buyout was occurring? It wasn't like they called us up and told us and we changed all the bars to be green. We can't do that. So it found out with what it tracks that the trend was slowly starting to gain momentum, and it colored the bars green. So you could have looked for any type of buy setup, and there was actually a strategy number 4 buy setup, I believe, prior to the buyout announcement. So it's a great, great tool. It will help you so many times. I'm not guaranteeing you that everything you use it with is going to gap up 60 points the next day in your favor, but sometimes it does happen. So it can be used on a 5-minute chart. I showed a 10-minute chart how it's used. I showed you a 2,000 tick bar chart that it worked fantastically with. I showed you daily bars. I showed you weekly bars. Works on any time frame in any direction. So if you're a candlestick trader and you've been having trouble or struggling, the reason is you need to be in sync with the trend. The best way we know how to be in sync with the short-term trend is by applying the PET D. Let's see, Jerry asks, there is no non-trending indication. It is either green or red. Yes, Jerry, very good question. It's either going to be green or red. You're not going to be, trending back and forth and then it goes into a gray zone. And when it goes from green to red, sure, those are the kind of whipsaw markets that markets do produce every once in a while, green back to red. But that's fine, because when you see green, red, green, red, green, red, you know that you're in a rangy, whipsaw market, and most likely you won't be getting any signals confirmed. So you don't want to take them. You need a little bit more of a trend to confirm that. So most of the time, you won't even be getting any signals in any type of strategy, and because of that, you won't be having any confirmation issues. Okay. Just a few more questions here before we have to conclude. Can you use TradeStation charts to black and white candles? Yes, you can use TradeStation charts to black and white candles as well. In fact, that's what I use. I showed you in the examples. I was using TradeStation black and white candles. Will the PET D show an intraday reversal or only end of day? No, Roger, shows intraday as well. Shows intraday, everything. Remember, any time frame, any direction. I showed you tick charts. I showed you daily bars, weekly bars. Does not matter. Okay. Okay, in conclusion here, before we sign off, the special offer, this offer is only going to be long for the next couple of days, I think for today and possibly tomorrow at this time. So if you're really interested, contact the people at Pro Trader Strategies. That's the email address, trading@protraderstrategies.com, or call them directly at area code 310-598-6677. They can set you up with a payment plan. All right, so you don't have to pay that full discounted price right off the bat. You can have a payment plan set up so that you can start trading it right away. But remember, if 2014 hasn't, been the best of years for you, if you're struggling, trust me, I know what that's like. I struggled for years as well. So if it hasn't been working, please, this is the technique that I feel can really get you on that road to consistency. Don't, miss this opportunity before we license this, and then in 2015 you see that it's maybe this price for every 4 months. So contact our trading consultants, give them a call, and thank you so much. If you missed a portion of this, I realize there may have been some issues with the connection. You can contact and get a recording of this. You can get the full recording of our webinar. But please remember, this deal is limited. This price is limited. Then it goes back up to the $1,000 range, okay? Thank you so much for attending. I really suggest you take advantage of this great discounted deal, and I look forward to all of you becoming students and members of mine at Specialist Trading. So long. We'll see you next time. Bye-bye.